But let's talk about India's renewable roadmap. Let me welcome on board Vinay Rustagi, the MD at Bridge to India, joining in on the show right now. Vinay, hi, good morning. Great to have you today on ET Now. Thanks for taking the time out. Vinay, as per our analysis, India needs to add about 400 gigawatt of RE capacity to meet its target of 500 gigawatt by 2030 vision. What kind of growth opportunities can we expect emerging from this?
Yeah, hi. Thank you and good morning. Thanks for having me. Clearly, India is very heavily dependent on coal. The government has announced very ambitious targets for the sector. Just to give you some context, we've been adding about 12 to 13 gigawatts per annum. So really, the potential is to double and triple the sector's growth rate going forward. So there is a huge potential, but we also need to be mindful that there are issues in terms of land transmission, financing, etc., that need to be addressed for the growth potential to be realized.
So, what are the short term and medium term challenges, though, for the renewable energy sector? Because I'm guessing there would be many.
Yes, that's correct. One is renewable is a variable source of power. It is not always available when the consumer demands it because it is dependent on the solar resource or the wind resource. So, which means that variability needs to be factored in, and we always need a backup source of power, which could be hydro, thermal, gas, or increasingly storage, some kind of a storage technology. And these alternate sources of power or backup sources of power are extremely expensive. So that is one challenge. Second is renewable is a very land and transmission intensive source of power. Of course, in a country like ours, land acquisition tends to be very expensive, very complex, very time consuming. Just to give you an idea, we need more than 1 lakh acres of land every year to realize the government's vision of 40 gigawatts per annum, and that's massive. And we already see with the existing, 12 to 13 gigawatts land is already a challenge. So that is one very big challenge. Second is there is a huge need for investment in the expansion of the transmission grid, which again takes time. Transmission typically takes 5 to 7 years to set up, whereas renewable projects have a gestation period of only about 2 years. And the third, I would say, is obviously it is very, very expensive. Together with renewables, storage, and transmission, we are looking at a capex of somewhere around $300 billion over the next 7 years. So these are the various challenges which need to be taken care of to realize the growth potential.
All right, Vinay, I just wanted to also understand from you what the outlook is on new ancillary segments in the RE segment, which according to you are showing green shoots. What kind of opportunities are you seeing in the value chain?
Look, I think one is the government pivoted towards Make in India about 2 or 3 years ago. So there is we are still very, very dependent on China, particularly for solar equipment, increasingly for storage equipment. And then with government now saying that we have to be self-sufficient, together with all the other policy initiatives like customs duty, PLI, etc., there is a huge opportunity for bringing manufacturing onshore, and not only for the domestic market, but also for supplying to other countries like US, Germany, Japan, etc., etc. So manufacturing is one. Second, I would say, is the distributed renewable market, both for supplying to the residential consumers as well as the corporate consumers. And these are huge markets which we believe are still relatively untapped. So that is, which could be actually accounting for almost half of government's target. So that is another very big opportunity, both in terms of construction of projects and financing and development. The third thing I would say is the storage. Storage, we are still, I would say, very, very slow movers. But there is opportunity opening up for pump storage, battery storage, both for manufacturing as well as deployment.
Let's talk about specifics here, and let's talk about specifics in terms of wind, solar. Now the wind has not been a great success story in India. Even though companies like Suzlon and some other companies have started way back in 2000, we've not seen too much of commercial success via the wind generation route. Why is that?
So, what happened in wind is that we used to have a feed-in tariff-based regime, which means the government was offering fixed tariffs to project developers. And that was a very stable, attractive regime for the investors. Now, that regime, under that regime, we were doing about 3 to 4 gigawatts per annum. And then suddenly, around 2017-18, we very pivoted very sharply towards a competitive bidding-based regime. Now, as very often happens in India, when you have a competitive bidding scenario, the tariffs went down to very unrealistic levels, which put a lot of pressure on the investors as well as the whole supply chain. And many of these projects which were bid during 2019, 2020, etc., they were actually unviable, and many of those projects had to be abandoned. So that is one reason why wind has slowed down. Second, of course, is that because of COVID, because of Ukraine war, etc., there has been, we have seen a massive disruption in the supply of commodities, price cycle, etc., because of which the cost of equipment has gone up. So these two things together meant that wind has seen a really, really tough time over the last, 3, 4 years. Having said that, I think we are turning the corner because commodity prices have stabilized. Many of these companies, including Suzlon, as you mentioned, have restructured and now are in a much better position, having raised new money to grow and scale up. Also, the sector has learned a lot. The supply chain has learned a lot. Machine efficiencies have improved. Technology has improved. The other very big factor in favor of wind is that wind is a diversified. It is the output profile of wind is actually quite diversified in relation to solar. So you can't keep on adding more solar capacity. The more solar you add, the more wind we need to make sure that we have even supply of power during the day and through the year. So which means that supply chain is improving, costs are coming down, the grid needs more wind power, and the result is that we do expect that the wind outlook is becoming much more positive. We expect the sector to grow from, say, about 2 gigawatt per annum right now to something like 6 to 7 gigawatts in the short to medium term.
Now let's talk about solar specifically. Rates have come down from 15 rupees a unit to about 2.5 to 3 rupees a unit. India has added more capacity than what America has added in last 12 months. That's the data what I have read somewhere. So my question is that if the Indian solar sector is such a big success story, why is that the developers who set up the solar capacity, they are telling us a very different story? I mean, if I look at the companies which are doing development of solar, who the developers per se, they are still crying for duty protection. They're still talking about Chinese imports, and they're still talking about lack of, right funding and viability. Is that true?
Yes. So, we have to differentiate growth with profitability. The sector, as you say, has been growing quite rapidly. But again, mind you, we added 12 gigawatts of solar last year, but that was way below the government's targets, almost, I would say, 40 to 50% below the government's targets for the year. Having said that, yes, growth is there. Yes, investment is coming in. But the challenge with solar is that it is a very open, commoditized technology. And when you have everything going through a competitive bidding process in which prices are, bidding is very, very aggressive, the returns are being squeezed out. And I can just give you an example that, 5 or 6 years ago, developers were hoping to make 15 to 18% kind of equity returns from these solar projects. Today, the returns are barely in low teens, very often lower than that. And that is quite challenging because the cost of capital has gone up. There is also competition for capital from other countries, US, Europe, Japan, etc., have set in place very, very attractive policies to attract investors. As a result, capital is becoming more expensive, and these returns of 12 to 13% are no longer very attractive. So, in a very commoditized sector, growth is there, but profitability is still kind of, I would say, the holy grail for most investors and project developers.
Vinay, great to have you on the show today and give us color on how India's renewable energy roadmap is looking like.
Thank you so much. Thanks for having me.